Hashtag Trending would like to thank Meter for their support in bringing you this podcast. Meter delivers a complete networking stack, wired, wireless, and cellular, in one integrated solution that's built for performance and scale. You can find them at meter.com/HTT. The EU orders X to preserve records as Grok nude picture scandal grows. GameStop closes hundreds of stores as the CEO chases a $35 billion payday. NVIDIA's Jensen Huang says he's fine paying $8 billion more in taxes. Other billionaires are not so sure. And a 1990s icon comes back as the symbol of AI resistance, Clippy. Welcome to Hashtag Trending. I'm your host, Jim Love. Let's get into it. The European Commission has ordered X to preserve all internal documents related to Grok until the end of 2026. It's a clear signal that regulators expect a long and serious investigation. The Commission is examining whether X failed to properly assess and mitigate harms linked to Grok before rolling it out at scale. The harms stem from sexualized pictures produced by Grok, including pictures of children. Reuters reports that the order covers technical documentation, model updates, risk assessments, and internal discussions tied to Grok's design and deployment under the EU's Digital Services Act. Preservation orders like this are not routine. They are typically issued when regulators believe evidence could matter years from now, especially in cases involving systemic risk. In this case, regulators don't have to look far for examples. Independent researchers have estimated Grok has been generating thousands of AI undressing images per hour, far outpacing known deepfake sites. But if past is prologue, this investigation could be extensive and look everywhere in the business, including email and Slack chats. And that rarely ends well for companies. Wired separately reported that Grok's standalone Imagine tool produced sexual content that was not just explicit, but in some cases appeared to involve minors, and that triggered reports to European authorities. X said it removes illegal content and penalizes misuse, but it appears that the EU doesn't feel that meets their standards. The Digital Services Act requires platforms to anticipate foreseeable abuse, not just respond after harm has already occurred. When an AI system makes non-consensual image manipulation cheap, fast, and viral, regulators treat that as a product risk, not a moderation failure. Now, this investigation is not simply about bad prompts or rogue users. By forcing X to lock down its Grok records for years, the EU is signaling it wants to examine internal choices. What risks were identified? What safeguards were debated? And what was shipped anyway? GameStop, the company that turned trade-in games into a huge successful business, has started 2026 by closing hundreds of stores, even as its board dangles a potential $35 billion stock award in front of CEO Ryan Cohen. According to an article in the tech blog Polygon, Cohen only earns that payout if GameStop boosts its market value to $100 billion and delivers at least $10 billion in cumulative earnings, roughly 10 times the company's current size. So you have to ask how he thinks he can pull this off. Apparently, employee morale isn't seen as a necessary component. The recent store closings were fast, brutal, and poorly communicated. Reports say that some workers learned their stores were shutting down via printed notices taped to storefront windows alongside QR codes offering customers a 20% trade-in bonus. Some of the public chat indicates that those who were given notice were given only days. One worker wrote on Reddit, We are all cattle to the corporate masters, numbers on a sheet, disposed of at their whim. What complicates the narrative is that not all of these locations were failing. Employees said that even well-performing stores were closed, and customers in some regions now face drives of 30 minutes to more than an hour to reach the nearest remaining GameStop. Estimates suggest that as many as 296 stores have already closed or are about to, with more still being confirmed. Meanwhile, the growth target itself looks detached from industry reality. GameStop's market capitalization currently sits around $9.5 billion. The broader video game industry is growing slowly, and almost all of that growth is digital. Downloads, subscriptions, and platform-run marketplaces that bypass physical retail entirely. Closing stores may cut costs, but it doesn't explain how you cut a brick-and-mortar chain into tenfold growth. The human cost is big and employees are resentful. One employee said, "GameStop doesn't deserve the rotten gum on my shoe, but I'm going to miss my store." Another laid-off employee wrote, "This location was my childhood GameStop." It'll be interesting to see what their new growth strategy will be. It certainly doesn't echo that old saying, "People are our biggest strength." Jensen Huang is saying something you don't expect to hear from a tech billionaire. Speaking to CNBC, the NVIDIA CEO said he's perfectly comfortable with a proposed billionaire tax, even if it ultimately costs him around $8 billion. Huang was commenting on a new ballot initiative in California, which proposes a one-time 5% tax on the net worth of individuals having over $1 billion in assets. Supporters are working to qualify for the 2026 ballot, and it would still need to be passed by voters before it could take effect. Huang framed his reaction as straightforward. If you've benefited enormously from the system, paying more back into it is simply part of the deal. But that presumably puts him in a small minority. The story notes that most wealthy executives have opposed wealth taxes, especially those that apply to unrealized capital gains, paper wealth that hasn't yet been cashed out. Mark Cuban has been explicit on that point. Cuban has said he's open to higher taxes on billionaires, but he's drawn a clear line at taxing unrealized gains, arguing it creates liquidity problems and forces people to sell assets just to pay tax bills. But the proposition does allow for the amount to be paid over several years, presumably to avoid these forced cash-outs. Huang and even Cuban are presumed to be atypical in their response. Peter Thiel and a handful of hedge fund billionaires have been widely reported as considering moves out of high-tax jurisdictions in response to similar proposals. But in fairness, there is little hard evidence that large numbers have actually left, or that proposed wealth taxes directly triggered those decisions. Much of the narrative remains anecdotal, although in fairness it seems believable. Gavin Newsom, governor of California, vetoed a California wealth tax bill in a previous session, citing his concern that it could drive high net worth residents out of the state and destabilize tax revenues. California already depends heavily on a small group of top earners, so even the risk of departures has been enough to stop legislation. Now, Huang isn't just saying tax me more, but he is implicitly challenging a core assumption in this debate, that billionaires will automatically flee if asked to pay their fair share. Whether he's an outlier or the first of many is unclear, but when the CEO of the most strategically important company in the AI economy shrugs at an $8 billion tax bill, it weakens the argument that higher taxes and innovation can't coexist. And finally, A 1990s icon has returned, this time as a symbol of resistance to modern AI. Microsoft's famously annoying digital paperclip is being revived as a protest avatar against AI features being pushed into everyday software. According to the tech blog Tuta, users are adopting Clippy profile pictures to signal opposition to what they see as the invasive nature and forced adoption of AI. Now, it's certainly ironic. Clippy was almost universally panned when it was launched. It was intrusive, distracting, and relentlessly unhelpful. People hated it. But now, years later, there's a nostalgic twist. Clippy didn't collect your data, didn't analyze your work, and it never was seen as something that could take your job. The backlash isn't only about Microsoft. It's focused on AI in general, but it is evident in attitudes Microsoft is facing growing resistance to how aggressively it's embedding Copilot across its products. Critics argue Copilot feels less like an optional assistant and more like a feature users are being nudged or pushed to accept, whether they want it or not. We saw that friction yesterday. Microsoft firmly denied reports that it was renaming Office products around Copilot branding, despite those reports being based on Microsoft's own product pages. Officially, Office remains Office. Visually and strategically, Copilot often appears front and center. Microsoft doesn't release detailed Copilot user figures, but one analyst estimated that usage remains in the single-digit millions, compared with hundreds of millions of Office users worldwide. Nostalgia isn't driving this protest. Experience is. People remember what intrusive software feels like. They just didn't expect it to come back smarter, hungrier for data, and framed as inevitable. And that's our show. Check us out this weekend as Project Synapse is going to look at the AI news from the past few weeks, and we'll probably be looking a little bit at this backlash as well. Once again, we'd like to thank Meter for their support in bringing you this podcast. Meter delivers full-stack networking infrastructure, wired, wireless, and cellular to leading enterprises. And working with their partners, Meter designs, deploys, and manages everything required to get performant, reliable, and secure connectivity in a space. They design the hardware, the firmware, build the software, manage deployments, and run support. It's a single integrated solution that scales from branch offices, warehouses, and large campuses all the way to data centers. Book a demo at meter.com/HTT. That's METER.com/HTT. I'm your host, Jim Love. Have a fantastic Friday.